The U.S. dollar is mixed versus the three major currency pairs. The euro and the sterling are both lower versus the U.S. dollar, while the yen is higher. I'll go through the technicals that are driving these currency pairs to start your trading day in the North American session. So let's get started. Looking at the hourly chart of the euro versus U.S. dollar yesterday, we came in and the price was trading above and below the 100-hour moving average. We went up and tested the high of this swing area through here, which goes back in time back through here. But you can see some of the levels in play through here, 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 and here, and some low levels as well along the way. And the market did find some resistance sellers against the high of that swing area between 1.04529 and 1.0467. Market fell back below the 100-hour moving average and came down to the next target area, which is more localized over going back the last couple of weeks. And we did find support buyers against the low of that swing area. The rebound in the Asian session into the European session came right into the mix of this swing area and the rising 100-hour moving average. And both of those technical levels did their job in pushing the price back to the downside. What I like to say is traders leaned against that level. Why do you lean? Because if it goes above that level, then you get out. But if you can lean against it, what your hope is that the price moves back to the downside, and that's exactly what it is. So those sellers up here were benefited from this move to the downside right here. The price has now moved below this target area down here, increasing the bearish bias, and we're trying to see if traders can now lean against the swing area once again. We will see if that prevails. That's the close risk level, this area right here between 1.04326 and 1.04413 for traders who think the euro is going to the downside. For traders who think the euro is going to the upside, this is the area of support that you want to lean against at 1.0405 level. The 200-hour moving averages moved up to that level. And also we have a key level off of the daily chart at that level. It represents the 50% midpoint of the move up from the 2022 low to the 2023 high. The 50% retracement comes in at 1.0405. And so if we go back to our hourly chart, that's the combination of the 200-hour moving average and that level right here. So that's where you would sellers would aspire, or buyers would aspire toward perhaps buying against that level in hopes that the price holds that level and pushes back to the upside. Right here, it's kind of neutral in between resistance up here and support down here. But the sellers are in the short term controlled by the fact that we did hold against resistance right here, hold against the 100-hour moving average. Let's take a look at the dollar versus yen next. And if we look at this currency pair, what we see is that the price tried to rise in the Asian session and the European session. We came up to what I've talked about in yesterday's video, cluster of moving averages, including the 100 and 200-hour moving averages. Both of those were converged around that time at the 152.396, creating a level that traders could lean against on the top side. And indeed they did, and they pushed the price back to the downside. The low price that we saw came down toward the low price that we saw in the, maybe in the early New York session, maybe late European morning session, found support buyers against that level and pushed back to the upside. So what we know is that this area right through here with the 2 hourly moving averages held resistance, and we're going to need to get above those levels. And I might add that the 200-day moving average as well in order to increase the bullish bias, give the buyers the go-ahead to push higher. We call last week the price did fall below those moving averages and decide to hold against the 200-hour moving average in this case and push the price down. So the last 1, 2, 3, 4 times that the price has tested the 200-hour moving average, we've seen sellers. So it doesn't. I still think that we do need to get above the 200-day moving average, however, to show that the buyers are serious about taking the price back to the upside. Absent that, and we have this swing area down here, which was reestablished with the low price from yesterday's trade. And then we have the double bottom right here from last week's trading that stalled the fall at 150.92. If we go back to the daily chart and take a look at where that took us, kind of in nowhere's land here. But if we do break below that level, it opens the door for a potential move all the way down to the 149.22 level on the downside for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And again, we'll focus on the hourly chart. And I spread it out a lot, but you can see how the last few days, last 4 days, as a matter of fact, we've seen false moves, false breakouts to the upside. 1, 2, 3, 4, 5, 6 or so different breakouts to the upside. That area comes from back here, where we had a floor through here develop, a ceiling through here develop. Then we moved above and used this level as a floor once again, and finally a ceiling once again right through here. So it had all the makings of a key technical level. What we didn't do is the market couldn't figure out which way it wants to go. And in trading here today, we are trying to make a break to the downside as we start the North American session with the price falling below the 100-hour moving average and away from the 38.2% retracement of the move down from the, I guess, whatever the high is back here, November high perhaps, down to the low price that we saw in January. And we're also breaking back below this swing area right through here after all chances for the buyers to take the price to the upside, and they all failed over the last 3 or 4 trading days. So sellers are trying to take control in the short term for the sterling versus US dollar, stay below the 100-hour moving average, stay below the 38.2% retracement in the swing area, and we should see a further rotation to the downside. We'll look toward this level right through here near the 125.50 level, break below that level, and the 200-hour moving average. That's this line right here, along with the swing area right through here, becomes the next key target for the pound versus US dollar. My name is Greg Michalowski. That's with your technical look to kickstart your North American trading session. Good fortune with your trading. Bye-bye now.